Welcome. Today, we're bringing you an important update on a company we've followed closely, Nutriband, ticker NTRB. As a reminder, Nutriband is developing its proprietary Aversa abuse deterrent technology. Aversa is a platform designed to make opioid-based transdermal patches safer. While the lead product, Aversa fentanyl, is aimed at the opioid crisis, the pipeline also includes abuse deterrent versions of a buprenorphine patch for opioid addiction and a methylphenidate patch for ADHD. This technology is backed by a strong intellectual property portfolio, with patents granted in 46 countries, and a recent filing seeks to increase protection to 2045. To execute its development, Nutriband has an exclusive partnership with Kindeva Drug Delivery, a global leader in the space. Before we begin, please note that the following discussion is for informational purposes only and does not constitute investment advice. We will provide a full disclosure at the end of this episode. A key part of their story has been the anticipation of a critical dialogue with the FDA. Today, we have a major update on that front. That critical dialogue has begun, and the path forward for Nutriband is becoming clearer. Noble Capital Markets has reiterated its Outperform rating and its $15 price target, and now we'll break down the latest developments. According to the latest report from Noble, Nutriband held that key meeting with the FDA in September. The company has presented its manufacturing and development plans. This marks a major step forward in the regulatory process. While the final feedback is still pending, initiating this formal dialogue is a crucial part of clarifying the path to approval. Another meeting is anticipated before year-end to finalize the trial design. So, what happens next? Based on this progress, the timeline to market is coming into focus. First, the final clinical study, a human abuse trial, is now expected to begin in the first quarter of 2026, pending the final trial design. This study is designed to show how Aversa's technology deters attempts to tamper with and abuse the fentanyl patch compared to a generic version. Second, following that study, Nutriband anticipates filing its new drug application, or NDA, later in 2026. This will be done through the accelerated 505(b)(2) pathway, a faster and more efficient review process. Finally, allowing for a standard 10-month review, potential FDA approval is anticipated in 2027. For investors, this transforms the narrative. We now have a tangible, multi-year roadmap that is moving from planning to the final stages of execution. How is Nutriband funding this final push? This is where the company's brilliant and unique business model shines. Nutriband uses revenue from its profitable contract manufacturing division to fund its R&D. The latest report confirms this strategy remains a core strength. Crucially, management expects to get to the NDA submission without needing to raise more money through dilutive financing. In an industry where early-stage companies often have to repeatedly issue new shares, this is a powerful validation of their model and a massive benefit for shareholders. Furthermore, the manufacturing scale-up with their exclusive partner Kindeva Drug Delivery is complete. This means they are operationally ready for the final clinical trial and potential commercial launch. The problem Nutriband is solving remains as urgent as ever. The opioid crisis continues, and the market for a safer fentanyl patch is immense. Market analysis cited by Noble projects annual sales of $200 million for the branded Aversa fentanyl. If the FDA were to mandate this kind of abuse deterrent technology for all fentanyl patches, similar to what it did for opioid pills, that market could expand to $800 million annually. And this is just the beginning. The Aversa technology is a platform. The pipeline also includes abuse deterrent versions of a buprenorphine patch for opioid addiction and a methylphenidate patch for ADHD. So, to summarize the updated investment thesis, Nutriband has made significant progress with the FDA, initiating the final discussions that will define its path to market. There is now a clear anticipated timeline for a clinical trial start in early 2026 and a potential FDA approval in 2027. The company's proven, self-funding business model is protecting shareholder value by avoiding dilution on the way to the finish line. And it is all aimed at a first-in-class solution for a massive and underserved market. Noble Capital Markets' reaffirmed $15 price target reflects this immense progress and the high-value milestones just ahead. The story is now focused on the final, crucial steps of confirming the streamlined regulatory pathway and executing on a clear plan. As a final reminder, the information in this presentation was prepared by the investment relations firm JP Capital. In the interest of full disclosure, this is a compensated presentation. JP Capital has been retained by Nutriband for investor awareness services, for which it receives a cash and stock compensation. Please note, JP Capital is not a broker-dealer or a registered investment advisor. This content should not be considered independent analysis or advice designed to meet your specific investment needs. Furthermore, associates and employees of JP Capital may trade securities of the company. We strongly encourage you to conduct your own independent research and consult with a licensed financial professional before making any investment decision. For our full, detailed disclosures and disclaimers, please visit jpcapital.finance.